In the latest Vedanta Share news, the globally recognized player in metals and mining has made a significant announcement. On September 29, Vedanta Limited revealed its decision to undergo a demerger, restructuring its business into 6 distinct listed entities. This strategic move aims to simplify Vedanta's corporate structure, creating sector-focused independent businesses and offering diverse investment opportunities to global stakeholders, including sovereign wealth funds, retail investors, and strategic investors. The demerger plan, executed through a vertical split, will result in the formation of 6 separate companies: Vedanta Aluminium, Vedanta Oil and Gas, Vedanta Power, Vedanta Steel and Ferrous Materials, Vedanta Base Metals, and the existing Vedanta Limited. Shareholders of Vedanta Limited will receive 1 share in each of the 5 newly listed entities for every share they currently hold in the listed units. Let's delve into the specifics of each demerged entity. Vedanta Aluminium, positioned as India's largest company in terms of captive power and alumina refinery, this entity will continue its operations in setting up coal and bauxite mines. Additionally, it will retain a 51% stake in Balco. Vedanta Power, emerging as one of the private sector power producers in India, this entity will play a crucial role in the energy sector. Vedanta Base Metals, with a diversified portfolio of international base metals assets, including Tuticorin, Fujairah Gold, Silvassa, and VZL, this company is set to be a key player in the global metals market. Vedanta Oil and Gas, home to Cairn Oil and Gas, this entity is poised to become India's largest private oil and gas production company. Vedanta Steel and Ferrous, as one of the largest private sector exporters of iron ore in India, this company, holding a 95.95% stake in steel, will include assets such as Sesa Iron Ore, Sesa Coke, WCL, Liberia, and Electro Steel. Vedanta Limited, the currently listed company, will continue its engagement in the manufacturing of LCD and display glass, semiconductor business, stainless business, and retain its stake in Hindustan Zinc. This restructuring process is expected to be completed by the financial year 2025, subject to various approvals, making it a 12 to 15-month endeavor. Anil Agarwal, the chairman of Vedanta, expressed optimism about the move, stating, "We believe that separating our business units will lead to faster growth in each vertical and increase their efficiency." Stay tuned as Vedanta embarks on this transformative journey, reshaping its corporate landscape for enhanced growth and effectiveness. As we wrap up this update on Vedanta's exciting demerger into 6 distinct entities, we're eager to hear your thoughts. What do you think about this strategic move? Share your opinions in the comments below. If you found this information valuable, please consider subscribing to our channel, hitting that like button, and sharing this video with your network. Your support keeps us motivated to bring you more insightful content. Stay tuned for more updates, and until next time, keep those comments coming.